Let's go on to the second top trend of the 2020s. Now that's to do with big companies. First, let's link it with what happened in the 2010s, the last decade that's just completing. Big companies got bigger and bigger. Look at the share of the top 10 companies and how it grew from 2010 to 2019, from 9% to 14%. Now, that is actually a huge increase in real terms.
I mean, yeah, because this is the share of the world stock markets.
Yes, yes.
That the top 10 companies were 9% in terms of their value of the global stock markets. Now it's at 14%. Wow. This is back to close to the highs we saw at the peak of the tech bubble in 1999-2000 when a handful of companies dominated.
Right.
In India too, the large companies got larger, especially in the last 3 years. And the top 10 companies in India, in fact, today are 55% of India's stock market capitalization. So also very big in India. But in the difference is that in India, it's always been the case. It's gone up again the last 3 years, but generally the top 10 have dominated.
Dominated much more than the rest of the world.
Yes, and the rest of the world, even the rest of the emerging markets on average.
Okay.
But now in the world also we have seen this increase where the top 10 companies are dominating.
Does that mean that there's more inequality in India?
Well,
if the top 10 is doing so well here, so much higher.
That's right. That is a sort of effect of that, but we will come to that in greater detail in terms of what exactly does that mean in terms of rising inequality.
Right. So let's move on to what this actually means in terms of what happens in the next decade to companies that have done well. Just have a look at this. The top 10 stocks of any decade actually struggle in the next decade. I mean, that's a huge change. Look, for example, what happens in the percentage gain of the top 10 stocks in one decade. 2,100% gain in a decade. That, to be a top 10, you have to have that type of thing. But the next decade, just a 65% gain. The same stocks, 2,100% down to 65%. So one has to be very careful of just saying, oh, it's doing so well, let's invest in it, because the tendency is if you're doing terrifically, you're going to collapse in the next decade.
So the 2,100 number here is important to explain, which is that this is about the top 10 companies today, which are like in the world. Like how much have they gained?
Yes.
But the important thing is that 9 out of these companies were not there in the top 10 at the beginning of the decade.
Right.
And so therefore this gain is huge. But once you're in the top 10 at the end of a decade, then the subsequent decade, this goes back again to my big theme of this discussion that we're having today, that the winners of one decade are really the winners of the subsequent decade.
Are the losers of the subsequent decade.
Yeah, in terms of that they end up becoming losers, in fact, are really the winners. At both a country level and at a stock level, we see this pattern.
Actually, I mean, the next bit of data you show is really an eye-opener for me. Let's have a look at the top 10 companies over the last 5 decades, and you just see the churn. Churn is the norm. If you're on the top 10 company in one decade, you're rarely, if ever, 1 in 10 chance of being in the top 10 in the next decade. Top 10 companies one decade are almost completely different in the next decade. Look at 30 years ago, Exxon, Walmart, etc. And then 20 years ago, very few left. Microsoft enters and Walmart is the only one that's still there.
And General Electric, just 2 companies.
And General Electric, 2 companies there.
Yes.
Then 10 years ago, basically it's Microsoft still there. So that is, and then today, a completely different lot, but Microsoft. So Microsoft, 3 decades, and frankly, this decade, it's been in the top 10 because of Satya Nadella.
Right.
It was plummeting down to what, 300 billion, and he's brought it up to 800 billion. You know the figures better, but something like that.
Yeah, but you can see the churn here, which is that I think a lot of people are really surprised by this, which is that that of the top 10 companies in the world today, 9 out of these top 10 were not there in the top 10 at the beginning of this decade.
That's
tells
amazing,
you about the incredible amount of gain. And some of these companies wouldn't have even been in the top 100 of the rankings at the beginning of this decade. That's how significant the gains have been, but also a cause for concern, because many of them now are quite expensive after having appreciated so significantly this decade. And they also sort of have to deal with obsolescence that comes about in some of these industries.
Right. I think the fascinating thing is that 1 out of 10 survives in the top 10. I mean...
Yeah, in any following decade.
Yeah.
That's right.
It is just an amazing churn. Now, those are the big companies, but what about the smaller companies? Are they likely to do well, badly, Ruchir? Let's have a look at what you say about that. Small companies, in fact, you say, are likely to rebound in the USA. And whether USA is a signal for the rest of the world we'll come to. But small companies have rarely been so depressed compared to large companies, relatively. Just look at this. The percentage gain of large companies versus small companies. Large companies in America gain 230%. Small companies, 110. That is less than half. And in India, let's have a look at what happened in India in this last decade. Large companies gained 115%, small companies 6%. So that, rather than worrying, is a signal, because small companies, large companies historically have done, in fact, often small companies are better than larger companies, but this decade's so bad, you feel they could rebound.
Yeah, because one thing we also look at, this is more from an investing perspective, are valuations.
Right.
And the point here is that the valuations of these small companies, not just in the USA, but in emerging markets, in India, the valuations of these small companies relative to the large companies today is also quite depressed. Compared to the history that we look at. So I think that's another fundamental case to be made as to why small companies could do better. Now, there are other reasons too. It just won't happen because of valuations. It's also because I think the business environment could get more conducive for small companies. It could be easier, given the platforms you have today, whether it's Amazon, others, the large companies, but the platforms also provide some of the small companies to gain market share more rapidly.
Large companies around the world will not do so well. May not.
On a relative basis.
Relative basis. So let's look at the second of the top 10 trends for the 2020s, for this coming decade. Number 2, let's have a look at what it says. New big companies likely to emerge. The existing top 10 are unlikely to be there in the next decade, and smaller companies may be beautiful again. Small may be beautiful again. That's lovely. So it's just a return to what has been in the past. I mean, this depression of smaller companies is unusual.
Yes, that's right.
It's really bad this time.
So I think there are 2 parts to this. One, in the top 10, we're like, if history is any guide, then when we do this show 10 years from now, and we look at the top 10 companies.
Don't worry. We'll just say tick, tick, we got all right.
9 out of the top 10 companies are likely to be different than the list we see today, if history is any guide. And similarly, I think that a lot of small companies is where the winners will emerge more compared to the large cohort.